Hello and welcome to another MCO update on the DXY. Well, today I want to share with you my latest thoughts here about the microstructure. I mean, the overall idea. Yeah, the overall idea here has not changed at all. If we go to the daily time frame, the idea is still that the DXY is likely still in a fourth wave correction. Could also be an A wave, if it's a larger correction. But for now, the focus is on whether we actually have a local low in place. And for now, it's still preferred to go a little lower. So I will share that with you. But it's always important to get a good idea of the bigger picture. I mean, the price has already reached the $97.50 level, the 100% extension we wanted it to reach, because that's an ideal target, right? The 100% extension. But based on the microstructure, I think it would still look best for the market to move towards that $94, $95 range. Looking at the structure, this is seen as an A wave down. That was the initial move down into the January 23 lows. A B wave, long sideways correction, consolidation, and now the C wave down. It could go easily a little lower, but shouldn't go much lower. So that's the idea at the moment. That's just a standard Elliott Wave pattern. We often get these scenarios where the A wave and the C wave, they basically have a very similar length. It's been my perspective for quite a long time that this is a wave 4 correction, and it's played out. Looking at the 4-hour time frame, the idea is that this move down, obviously as a C wave, should be a 5-wave pattern. And I've got the wave 1, I've got the wave 2, I've got the wave 3, I've got the wave 4, and in the white scenario, I think this wave 5 should still stretch a little lower. The 61.8 extension, coupled with the 123.6 extension, couple of levels overlapping there around $94, $95. Ideal. Do we have to get there? No. Technically speaking, we already have 5 waves down. 1, 2, 3, 4, 5. But this would be quite a weak 5th wave. And so it's preferred to still go a little bit lower. Now, if we zoom in a little bit, then this decline is not impulsive. I can see that this potentially will form an ending diagonal in circle wave 5. At the moment, I still slightly prefer the white scenario, in which then this 5th wave is a 5-wave move, and I would label this wave 1, wave 2, wave 3, 4, 5. Let me change that to white. This would be my preferred interpretation, to get a 5-wave move down in wave C towards the $94, $95 level. The internal structure indicates that this here could be an A wave, this could be a B and a C. Why? Because if it's really a diagonal pattern, then the subwaves are all corrective. Okay, so we have an A, B, C in wave 1, we have a wave 2, A, B, C in wave 3. Okay, now what we shouldn't ignore is the yellow scenario. That's just a different pathway that can also still lead us to one more low, but maybe it's more like the scenic route the price would take. So I've shown you the white scenario, direct move down. It has to be an ending diagonal in circle wave 5, which started up here when the 4th wave topped around the 12th of May. It is important in this scenario that the price the white count, that the price stays below the green line. The green line is relevant because this is the invalidation point for the white diagonal pattern. But just want to remove what we don't really need here, keep it clean. It is important to recognize that there is also a resistance area. So if this is a white wave B, it shouldn't really break above the 78.6 retrace level. And that is located here between $99.90 and $99.06. So that means if we get a break above that, maybe over the coming weeks, then yeah, it could easily be the case. That we're in the yellow count. Any break above this resistance. Why is this important, or what would it basically mean? Any break above resistance would indicate we're likely going to see invalidation of the white scenario, and the market might form that extended 4th wave. It just means that this 4th wave never finished, on the 12th of May. Instead, it's a wider ABC structure. It could easily happen, and then we go down. So I would say to keep it quite simple, to keep it quite simple, the $99.90 level is the key pivot that helps us to distinguish between bearish and short-term bullish momentum. In both counts, I don't yet assume that a lasting low has been established, but we should be close. Yeah, that's the update on the DXY. Hope you enjoyed it. Thank you very much. Bye-bye.